Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 10th of April. Starting off with the FTSE 100 as usual. Here you can see we've got this rising trend channel from December, but the mid-move consolidation, we're hoping ahead of a move to the top of the channel there. Now as high as 81.50. We're still looking for that, perhaps as soon as the end of this month. On the downside, a break of 78.80 could lead us back down to basically previous December, March resistance just below 7,800, but we're not expecting that after the considerable consolidation that we've had at the higher levels. Seems as though we are poised to get above 8,000 and hopefully stay there. Moving along to the DAX, and here we're, I suppose, probing down towards a floor of that rising trend channel from October. 18,000 area, the sort of the psychological level as well, and that was also the resistance on the way up. At least while we're above 18,000, we're still looking for progress towards 19,500 perhaps by the end of next month. Worst case on the downside now is the 50-day line, 17,600, but the RSI remaining above neutral 50, bouncing off the 50 level at 56, so that does give us further comfort that we are just consolidating before a fresh move to the upside. The Dow is next, and here the situation is that we were on the floor of the rising trend channel from basically September, October. If you don't believe in the channel, then you're looking at the market really trading either side of the 50-day moving average. The recent support around 38,500, below that there's the risk of 38,000, but we're hoping that this will be the floor after the retreat from 39,900 plus that we had last month and at the start of this month. The overall pattern here is that above 38,500, still looking for a 40,000 plus target, maybe 40,600 now by the end of next month. Moving on to Bitcoin, and here ahead of the halving, I suppose it's just like 10 days away, something like that. You can see that the market's still in this rising trend channel from January. We had an abortive attempt to break through that March resistance line. That was around 71,000, so we want to see this market on the right side of 71,000 in order to get it back up to the top of the rising trend channel from January, currently pointing at a target as high as 84,000. I suppose that would now be for the end of next month rather than this month. On the downside, recent support 63,000 and then 60,000 are the places we are looking at. RSI remains above neutral 50 at 53, so that is helpful. Moving along to the old version of Bitcoin, otherwise known as gold, and here we've got the situation where we just nudged our second or third target, probably the third target in the recent past, through the 2380 zone yesterday, and although we're probably looking for more, hoping for more, in the meantime got support around 2280, so 2280 to 2380 probably the range for this market at the moment, although there is scope for further gains, and that would be along the lines of the line I'm just about to draw, maybe up towards the 2450 area as the next target within what's effectively that rising trend channel from back in February, but more on that depending on how the dust settles over the next few days, but ideally we stay on the right side of 2280 whatever happens. Moving along to crude oil, which is also looking quite golden at the moment. The reason I'm saying that is the golden cross that we had. Unfortunately, we had the golden cross, and that sort of almost coincided with the recent peak there towards $87. The ideal scenario is that we stay above that broken resistance line there around the $84 area and then make progress towards 95. But the price action of the last 24 hours perhaps not as positive as we might have been expecting. Moving along to the stocks, and starting off with Andrada, which looks like it may finally, hopefully, be building a base. We've already had a few attempts at building the base there between 4 and 5 pence. This hopefully will be third or fourth time lucky. The reason for the relative optimism now, apart from the blue candles that we've had, is also the way that the 50-day line is now rising. We had the initial target there at the top of that rising trend channel base around 5.2 pence. Above that, looking for basically the shares to retest the October-November resistance on the way down around 6.25 pence. But hopefully this is the turning point over and above the trend line break and the 50-day line break that we had last month. Moving on to one of the more traded stocks around, and that is Barron Oil. And here, a bit of a fiddly chart. You can see it's rather spiky, etc. But the key here is to break above the blue 50-day moving average. That's just above 0.06 pence. Initial target after that, the 200-day line, 0.8, and then best case by the end of next month, if we get going, would be up to 0.12 pence. But early days, the main positive here is actually the way that we've got relatively strong candles over the near term, but the 50-day line really needs to be broken over and above a gap fill from back in February. On to GCM, which was one of the recent big winners, and it looks like it's revving up for a new move to the upside. We've established support in the 6.8 pence area and looking for now 10 pence to be broken. If we can do that over the next few sessions, then the target here is as high as 15 pence, maybe by the end of next month. Moving along to one of the more followed situations, and that is Helium 1. We had an RNS today, and what we were looking for here was basically a rebound around the 1 penny area, 1.1 pence area, to lead to the 50-day moving average, which it did right on the nose yesterday. The high yesterday 1.72, so very well received, but we have retreated from that. We need a hold around the 1.25 pence area, that broken February resistance line, to then have a chance of heading back up to the 50-day line and breaking it. If we break through the 50-day line, the next level up, 2.5 pence. So a lot at stake, and what we don't want to see is any break back below that 1.25 pence area. IQE is next, and here you can see that the shares have gapped up quite nicely from the 200-day moving average and actually pushed through the 50-day line, above the 50-day line, around 22.25 pence, looking for up to 28 pence, hopefully by the end of this month. But I suppose the main sizzle here is that we've seen a bear trap gap reversal, so it's a bear trap from below the January support there, 18.75, and heading higher from there. On to Ondine, which has had a bit of a rough ride over the recent past, but today's RNS seems to have settled the situation a little bit. We've had a gap to the upside, and what we're looking for here is basically an end-of-day close back above that old November support there, around 8.2 pence. Above that, we could then hit or head back up to the 200-day line at 10.7 pence. But the key here is that we are looking at another bear trap gap reversal, so bear trap to a new low below the October support and then gapping up, so hopefully that gap will hold and it will mark a turning point. Synergen is next. I covered this quite a few times in the recent past, and here we have the broadening triangle base in place since August, and also a gap through the now rising 50-day moving average, and the situation is the longer we stay above that, around 5.3 pence, the better the chance of a move to 11 pence in the top of that triangle, hopefully by the end of this month. Ideally, we stay above the 200-day line at 6.9 pence in the meantime. Moving on to a stock which I haven't looked at for a little while, Synergia, and here an interesting pattern in the sense we've got a sharply rising 50-day moving average, and above that, at 0.11, looking for a retest of the 0.2 pence area, maybe by the end of this month. We get a repeat of the February spike. That can happen. As you can see, historically the shares have been able to jump quite sharply, and obviously then after that, then fall a few days later. But we're looking for, expecting a spike here while we're above that 50-day line. Next up is a stock which doesn't make many appearances here, and it comes in the form of Trinity Exploration. The picture here, that of a broadening, well, actually a rising trend channel base, and that's been in place since December. Top of the channel there around 52 pence. We're looking for that by the end of this month, while we stay above the 50-day moving average, currently around 42 pence. So that may be interesting to some. One of the best situations of the recent past has been Tungsten West, and here it's exceeded well the initial expectations. Initial target there 1.75, then it was up to 2.9, and then finally the rather rash resistance line there from back in July. That's heading for 8.75, and we could hopefully see that sometime this month, especially while we remain above resistance on the way up around the 5.3 pence level. Moving on to Toulouse, which I haven't looked at for a while as well, but here the recovery seems to be still in force. We have a situation where we pushed through the 200-day moving average at the beginning of last month, golden cross as well between the 50 and 200-day line. So we're looking for the top of that broadening triangle from November 22 to be hit at 2.8 pence, hopefully later this month. Ideally, we stay on the right side of 2 pence in the meantime. On to the last two, and it's almost daily look at Westminster Group, which is another one of those stocks which has exceeded expectations. And here you can see that we had the initial target there, 2.1 pence, then it was up to 2 3/4, and finally we're looking for 4.5 pence, hopefully well before the end of April. Ideally, we stay on the right side of 3 pence in the meantime, as that was resistance on the way down. Finishing off with Zoo, and here you can see that we're sort of crawling around the 50-day moving average. Bear trap gap reversal, one of our favorite signals, and breaking the high of that day, the gap up day at 33.6 pence. Above that, looking for the top of that falling trend channel from November as high as 60 pence by the end of next month. But the other final point to note is that this is a bear trap island reversal, so we gapped down to a new low and then gapped up on the return, which obviously looks rather strong in terms of a setup. That's it for me today. More updates tomorrow.